Hello everyone, welcome to the weekend market update series where I discuss my take on markets and according to the lens of technicals and fundamentals. So markets have been, going down like crazy since last week, and it started with Monday and it never stopped. So I'm going to discuss a lot of things including the levels and if this is the right time to go into the markets and do some shopping. So without further ado, let's start our analysis and let's start with the macroeconomic section. So let us understand what is actually going in the markets and why the market is behaving the way it is. So the first reason is the Iran-Israel, escalations and conflict. So what happened is last week, Israel bombed an embassy in Syria, in Damascus, and that belonged to Iran. And then Iran did a retaliatory strike against Israel. So it was 1-1 so far. And then again, Israel claimed that, they have, fired a lot of, missiles and, a lot of explosions were heard, which Iran, surprisingly denies. So it's like a lot of, escalations in terms of Middle East and geopolitical conflict is going on right now. And because of that, markets have gapped down on Monday, and then it started, the aggressive, downturn that we see. So that is one side of geopolitics where people are, fearful that if these tensions get escalated, then, it is going to affect the crude price. And if the crude price goes up, then so does the inflation. And that brings us to the second reason why the markets are going down. The second reason is the interest rate fears. So as you know, and as you can see that crude oil prices are, sustainably higher, more than, $80 per barrel, and it is staying at that levels. So if the crude oil, stays above $80 per barrel for a sustainably long time, then this puts an upward pressure on inflation. And if inflation continues to be sticky and if inflation continues to be high, then the Federal Reserve will keep the interest rates higher for longer. And finally, if interest rates stays higher for longer, then that is not going to be good for markets. And that is why you are seeing such a, massive downturn, because markets were pricing in, 2 to 3 rate cuts, and now they are pricing in 0 rate cuts. So that is the macroeconomic backdrop of the reason why markets are going down. Now, since that is out of the way, let us discuss the technical aspects of market and let us discuss the key important levels, because we were in a pullback territory, that is 0 to 5% drawdown. Now we are in a correction territory, that is 8 to 10% drawdown. So anytime the correction happens, it is normally from 8 to 12%. So right now, Nasdaq markets are at 8.5% plus drawdown. So this is going to be a really good buying opportunity since we have negated a lot of gains that are made this year. So I will give you my take on the technical aspect of it using the charts. So without further ado, let's jump on to the charts, starting with the weekly time frame. In the weekly time frame, I wanted to discuss the levels going forward. So I will discuss the support levels and the resistance levels and one key observation according to the price action. So let us go to the charts to see all of them. So this is the weekly chart. And as you can see, this is the 4th consecutive week downwards. So it is 1, 2, 3, and 4th. The key observation here to note is finally we have touched the 26-day EMA on the downward, trend. So over here, you can see that this zone, that is the green zone that I have drawn over here on the weekly time frame, has acted as a resistance previously. And we have spent a lot of time over here. I mean, markets have spent a lot of price action and time over here. So this zone is very highly likely chance that this zone is going to act as a very nice support moving forward. So anytime on the weekly candle you have touched the 26-day EMA, the chances of bouncing back from here are very, very high. So my initial support zone is this green zone that you can see over here. And then the final ultimate support is the 50-day moving average on the weekly time frame. My resistance going forward is going to be the year-to-date anchored VWAP, that is the white line that you see over here. So in my humble opinion, the 17,000 level and the 16,800 to 17,000 level is going to act as a very, very strong support going forward. So this is from the weekly time frame. Now, as you can see, a lot of POCs, that is point of control, that is the maximum amount of volume that has occurred in any one candle, has occurred over here. So you can see that this zone is a very dense zone. And so from a volume perspective, also this is going to act as a very strong support. So that is it from the weekly time frame. We are approaching a very strong level of support on the weekly time frame, and that should hold given that we have a big earning season next week. So this is my take on the weekly time frame. And now let us go to the daily time frame. In the daily time frame, I'm going to discuss a lot of support levels and resistance levels moving forward. But there are very high chances that we will be bouncing back from these levels, and let me show you why. So if you go to the daily charts over here, in the daily charts, the first thing to note is, since we had a bearish crossover, or since we lost the 50-day moving average, market continuously went down. And look at where it stopped. So it stopped near the S3 pivot level support. So S3 is the daily standard pivot, traditional pivot level where it stopped. So going into the next week, since we have a lot of big tech earnings, this level is going to be very, very important to watch. If the markets are not able to go beyond this low, that is Friday's low, then there is a very high chance that we will see a bounce back. And the natural first area of resistance is going to be this 5-day EMA, that is 5-day moving average, because that is the first thing to change the sentiment that the bulls needs to take over. So that is one thing. So the key support level over here is S3, that is 17,092 level. And if the markets, goes down further, then the 200-day moving average, that is 16,500 level, is going to act as a very strong support. So one other key thing to note on the daily time frame is, as you can see over here, from the all-time high, we are down by almost 8.5%. So normally in the markets, 8 to 10% correction or 8 to 10% is a very healthy remark or a very healthy percentage for any pullback or for any dip. So we are actually into correction territory. So all my investor friends out there who are, only investors who don't trade the markets, actively, for them, it is a golden opportunity to buy. Why? Because markets normally, correct only once or twice a year, and that too 10 to 8% is a very good opportunity to start to deploy the capital. So this is going to be a very, important and very golden opportunity to buy. So this is a level wherein you are already, down by, let's say 8.5% in the markets. So there is a very limited risk from here to the downside moving forward. So that's my take on the daily time frame. The resistance in the immediate term sits at 5-day EMA, and the support in the immediate term is sitting at 17,093 or 17,000 levels. So that is important going forward. I'm also going to show you the daily charts on the anchored VWAP as well. So that's where you will see why we stopped around 17,100 levels, because that's the exact level where the October lows anchored VWAP is plotted. So more on that in the coming section. But on the daily time frame, right now it is looking as if it's a really good buying opportunity. So this is probably one of the most important section of this video, where I show you the importance of anchored VWAPs and why is it so significant for a trader to mount the anchored VWAPs at a certain point, because markets tend to respect these lines, and this is the clear demonstration of why technical analysis work and what is the significance of all these lines. So let me show you the anchored VWAP charts. So in the last week, I have shared this chart also in my Instagram post as well, and I have told that these are the important levels moving forward, and I have also described what is the mounting point of each of these lines and what does it signify. So as you can see, the market kept on going lower and it actually stopped at these lines, and then it went on going lower. So as you can see over here, it really stopped at this October lows anchored VWAP. Now this October lows anchored VWAP has been plotted over here, the starting point. And why is it important? It is because that the market respected this level on Friday, and it actually bounced back from October's lows. So from this October lows, now it would be very critical for the markets to retain this October low and bounce back from here, because if it doesn't, then look at where the next support is. So it is over here. But in my humble opinion, so the story or the backdrop behind October lows is this was the time when markets priced in 6 to 7 rate cuts. So now, since we have a reality of inflation sticking in, and inflation not going lower as expected, the rate cuts have been negated. So this October lows anchored VWAP have been tested over here. So this is a pretty significant point, and it would be very interesting to see if buyers can hold this level, because this has a very high potential of being a bottom. So nobody knows the bottom only after it has occurred. So this is an area of interest as of now, and if it holds till the end of the next week, then this would be the potential area of bottom. So this October lows anchor is going to be very, very crucial for the markets. So Nasdaq has already touched the October lows, S&P has not touched the October lows. So if the price action goes sideways from here and then goes upwards, then that would be a very bullish sign. So keep a close eye on this October lows, and the markets doesn't just stop magically at these lines. So these lines have real significance. So this is why we tend to use anchored VWAP in our technical analysis. So you can see that these lines are respected. So this is why we take anchored VWAP into our technical analysis. So this is my take on the markets as far as anchored VWAP are concerned. So look for an opportunity for the markets to bounce from here. Look if these levels are not violated. If this low holds, then this would be a really good buying opportunity. So this is my take on the October lows anchored VWAP, and this for all the people who are new, I have mounted it on the lows of 2023, which happened to be in October. So that is why I have named this VWAP as October lows anchored. So that's my take on the anchored VWAP chart. And now let us go to the next section. Let us discuss the economic calendar events, and the theme going into next week is going to be the earnings from the big tech companies. So a lot of companies from Magnificent Seven is going to report its earnings. So as you can see that starting from Tuesday, Tesla is going to report. On Wednesday, Meta is going to report. And on Thursday, Microsoft and Google are going to report next week. So there is a lot of big tech earnings that are going to report, and we will have a start of a picture of how the earnings are happening across the board. And also next to next week, we have the last of the few big names like Apple and Amazon that are going to report next to next week. So going forward, the next 2 weeks are going to be very, very critical to know if the earnings are held, if the earnings are holding, and the companies are making money at the same pace or not. So if we find a big a crack in the earnings, or a big surprise to the downside, then that would be very, very bad for the stock markets, because at this time there is a lot of other macro events that are putting downward pressure. And to put the nail in the coffin, if the earnings starts to deteriorate, then that would be very, very alarming sign. So keep a close eye on these earnings, since these Mag 7 names have single-handedly propelled the markets forward. So if the earnings are holding up, if the earnings are good, then that would be the start of a trend reversal. So keep a close eye on these earnings for the next 2 weeks, because Apple and Amazon are going to report next to next week. So it would be very interesting to see the impact of AI, and if AI can have a significant change in the company's earnings, both in terms of top line and in bottom line. So it is one thing to talk about AI, and it is actually other thing to actually bring a difference in the revenue, because that is exactly what investors are going to ask the companies, that if AI is responsible for bringing a significant revenue change in the company's balance sheet. So it would be a really impactful week in terms of news and a lot of churn. So be careful and keep a close eye on these news events. Finally, all in all, I wanted to summarize the entire video in 2 important points. one thing is we are sitting on a very critical support on the markets as far as the anchored VWAP is concerned, and as far as the daily pivot levels are concerned. So we are sitting on a very critical support. Secondly, what we are having in the next week is the most important big tech names are reporting. So these events will go hand in hand. If the earnings are really good, then definitely we are going to see a bounce back. If the earnings are disappointing, or if the earnings are not that great, then we will see the markets go to the next support zone. But in any case, if you look at the risk reward based perspective, then right now the markets are looking at a very lucrative level to buy. So keep a close eye on earnings. If the earnings are good, then that would be the end of such a downtrend rally. And if the earnings are bad, then you will see further corrections. But personally, in my humble opinion, I don't see the markets going down by more than 10 to 12%. We are already at 8.5%. So whatever, I think the big tech earnings are going to hold up. I think they will continue to mint money, and that is my personal take. But you can do your due diligence, and this is my summary of the entire markets. So lastly, I would like to thank you all for viewing this video. Please feel free to like, share and subscribe. And you have showed a lot of love and a lot of support to me on this channel, so please continue to do so. And I would work very hard to bring high value content for you guys, so that you benefit from this and you learn from this. So thank you for watching again, and see you guys in the next video.